how does a strong U.S. dollar affect the stock market? And are there any industries that kind of perform better in this environment?
Yeah, I read a really good article breaking down the problem with the dollar. And the last time we had really significant problems with the dollars was in the 70s for the same reason. When you raise interest rates dramatically, all of a sudden your treasuries are paying more, and the rest of the world wants to buy those treasuries. And they're converting their currencies and they're buying dollars to do that. And so it drives the price of the dollar up. And that's fine up to a point. You want you want strength in the dollar, but you don't want too much strength in the dollar, because what happens is companies that are in U.S. companies that are selling internationally, all of a sudden their products get way more expensive.
Hmm.
Their profits can drop in that environment. Their revenues can drop in that environment. The S&P 500 has 40% of its sales coming from international sales. So those companies that have high exposure to that international sale, their products are getting more expensive because the dollar is growing versus those other currencies, right? So uh, if it really, really runs, it would be a pretty big problem. Watch how much the market starts to react positively if the dollar runs super strong. It has actually backed off just recently off of its highs, so things are looking better than they were even just a few weeks ago as far as that goes. You know, if you're traveling, right, that's great. You
Hmm.
go to Europe, it's cheaper, got this parity, you know, more or less between the euro and the dollar, which we haven't seen in 20 years. And so, you know, if you're buying things, so that's where that's the other that's the advantage side. That's where the companies could make more if you're buying things internationally
Hmm.
and selling them here, or producing them internationally and selling them. If you're selling to the U.S., for like you mentioned earlier, like Walmart when we were
Hmm.
talking about this earlier. So they go out, they're buying things internationally and bringing them in and selling. So it's getting cheaper
Yeah.
to buy those things, and that's good. And that brings that in. They can either have a higher profit margin or reduce the cost to the customer. And country like, let's say, a company in Europe that wants to sell something here, they're going to be cheaper
Hmm.
because the euro is now lower, and they, you know, so it depends. If you're coming the other direction, that's the advantage. I haven't seen a lot of great gains. I mean, Walmart's struggling with inventory issues and overall inflation that's causing, because they have very thin margins.
Hmm.
And so, you know, it's really easy with a higher wage cost increases to really disrupt those margins. We saw Walmart's, you know, report that came out this last quarter was off by, you know, quite a bit. And so, you know, it hasn't helped them so far. And of course, you know, say a European country trying to sell, Europe's struggling. So you're going to buy the European stocks. Those stock markets are really still struggling. You got some giant hedge fund managers with very good track records all shorting Europe right now. You know,
Hmm.
they might be wrong, but there's a reason they're doing that, because there's an expectation that Europe's going to suffer more because of this Ukraine situation and the reliance upon this Russian energy, which has gotten more expensive. You know, or potentially, actually, oil has come back under $90 a barrel now. It's kind of incredible, and you know, but has potential to be an issue, right?
Yeah, and we've seen it with the earnings reports. You know, many companies are saying that, you know, we're revising our guidance because the strong U.S. dollar is hurting our exports
Yes.
to other countries.
Yep.
I think you mentioned earlier that 40% of revenue for S&P 500 companies comes outside of the U.S.
Yeah.
And so it's rough. Like Solar Edge that I talked about earlier, how it dropped 15 to 16%,
Right.
was a lot of that was because they revised guidance because 30 to 40% of their revenue is from Europe.
Yeah.
And so selling products in Europe just became their margins go down.
Yeah. If they're competing with another solar company that has a similar product, for example, that's in Europe, their product just got more expensive versus that European product. And even if they keep it at the same price as the European one, they're actually losing more money because, you know, they're because of the exchange. So yeah, again, if a dollar gets really strong, it could be a real big problem. And as they keep raising rates, that has more and more potential to create a stronger dollar, especially if we're raising rates at a faster rate than other countries in the rest of the world. if you can, just to make up a number, if you can get 8% Treasury here and 5% everywhere else, where are you going to get here? You're going to come here. This is one of the best places to have a Treasury. This is the safe haven, and it's paying more. And so people from around the world are buying Treasuries, and they're making the dollar values go up, right? So, yeah, very, very interesting time frames. Part of the consequence of this high inflation.